This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Yesterday, I mentioned I saw some bullishness as it related to the option flow. This morning, Palantir is up 15% on a crushing earnings beat. Like, oh my goodness, strong, Don Pardo. So yesterday we had a little bit of this action here. Some folks came in of late right here. Last week, big size. This is July 28th and 30th and the like. They're selling puts. Puts were obviously with a very high IV, so that's a pretty good bet. Anyway, they're absolutely capturing tons of that IV crush this morning post earnings with Palantir rising up 15%. So you had tons of premium basically that they collected, bullish bets, one little hedge there. You also had the biggest ones right here were bullish bets, 20 million, another 21 million, et cetera, et cetera. And some of these were coming in just recently, right? 730, 727, 731. Anyway, long story short, you had Palantir with a huge big beat. And this is where it started consolidating. And I said, doesn't look too shabby, but I've got no edge with earnings. But the bullish option flow is very clear. Now for technicals, it has to get and stay above this 138. And that's kind of the mosh pit of moving averages. It clearly blew through that. So you can see this 138 tagged it just briefly after hours, moved up into almost 148. Talk about a monster print, and now it's going to digest. So you know when they open, they're going to monetize some Palantir for sure, but congratulations if you did anything with that. But look at SPX, right? Boom! Not only did it come back into that 7485.85 gap fill, it got above, and then yesterday, Meltup Monday was madness. Look at that 7,600 pin for SPX, made it up to this trend line. More importantly, it finally made it up to 7584.41, which was a gap fill on the hourly from way back here in early June. So you can't really see it too well, but June 4th. Boom, and it's just been sideways, chop, crazy. Now, it's moving higher on all the things we've talked about, but it's been an oversold bounce extraordinaire, post FOMC, not hiking, not likely September, yen intervention, Iran de-escalation, all kinds of the usual suspects. But look at this. Look at the Nasdaq composite. Also, remember I said this is very important. It has to hold the 25223 area. It came down 2 weeks ago. Last week was your dump right into this beautiful 30 and 21 week, formed the potential of a morning star reversal. What does that mean? It means it can go a lot higher. So here it is on Monday melt up right into that trend line. Just needs to get and stay above 26,126 for COMPQX. It's pretty darn powerful. And then we've got the Qs, absolutely perfect. Like this where I had to overshoot to the downside, but you know my target. I was very 664 and change. And it made it, and then it bounced. And I said, my first target is 682.77, needs to get and stay above 683 for the QQQ. It did a fabulous job last Friday. Monday, beautiful. Went right up into my perfect, look at this 701. Perfect. Now, once it gets above 701, I said, next is 710. Why 710? Right up here, this 710. I said, be careful, be careful. This is where I expect it to keep rolling over. It did. FOMC, this is literally the FOMC Wednesday 729. Like, honestly, this is so technically or predictably macro event triggers where you sell into an event and then you, right now, cover, buy into CPI on August 12th. Let's see what happens. In the meantime, the Qs are roaring higher, literally level by level, 664, and then that 683, and then 701. We've gapped above to 710. We've gapped above in QQQ to 710. It doesn't look done. So we still have these upside targets. As I mentioned, I'm going to round up just because it's easier. I've recited them before, but we've got an hourly gap fill, 715, 725, and 735 and change. So that's where we're going. Like, this is pretty darn bullish. And on a weekly time frame, all we have to do this week, this Tuesday, now we got non-farm payrolls that can interrupt the apple cart, but let's be honest, if we get and stay above 711, this thing can move a lot higher. So by a lot higher, I'm talking this neck of the woods. So Nasdaq Composite would have a shot, believe it or not, in the 28,000, 29,000, 30,000 kind of neck of the woods. SPX would be making a beeline for that 77, 7,900, even higher potentially, especially if we're talking yield curve control vibes, which is pretty much what the perma bulls are absolutely transfixed on. So you get the strong Don Pardo look above 710 for the Qs, even though it's up 1.6, you got a very strong chance for a earnings beat with Palantir, setting free the bulls. Palantir is the reason for the season in excitement, but just remember Palantir has made it into its descending 200, very, very, very much like it did over here when we had a dispersion unwind of size. And I literally warned on this particular print, I said this looks like a pump before a dump, and sure enough, boom, it was. So this Palantir doesn't mean it can't stay here in this kind of neck of the woods, but that is a descending 200 day. So likely more chop for those who are wider time frame. Okay, getting and staying above 160, 140 is absolutely the ticket if you're more trend long. So we've so well played this 160, 140. This was earnings exactly here. That was a short. That was a short. Oops, sorry. Right here, 160, 140. That was a short. So we've got to get and stay above 140, 140 if you're really, really bullish Palantir. Yeah, they crushed it. No question. Revenue was up 93% from a year ago. Net income up threefold from a year ago. Adjusted operating margin came in at 62%. I'm talking PLTR. So for those who do this rule of 40, this is a popular, I guess, little cheat sheet. You add the 93% growth to the 62% operating margin, you get 155. So anything above 40 is considered a growth stock. Palantir's at 155. Anyway, you can look it up, rule of 40. Now, the fact that it came back in on valuation and then it consolidated here, obviously it went sideways in price and time, but now it's out of earnings and wham! We've got a big quarterly beat. So you obviously have the AI ecosystem that is freaking out. Look at this. What? It's already at 715. That's how quickly those short covering rallies can happen, like April 7th ceasefire intervention that caused a gap up above the 200-day and go. It was also perfectly timed with the end of the quarter, new fund flows. Now this is perfectly timed with the August 1st, new fund flows, all that. Look at Qs take off. So what I'm going to be looking for, just so you know, is to see if this little stochastics, this is obviously a big move in the Qs since the 644 price target hit, and it's now coming into my look at that, my first price target of 715 of that first hourly gap fill. Actually, you know what? I did that wrong. That wasn't my first. This was, but I forgot to point it out. There we go. All right, so 705, 715, 725, and then 735, roughly. So this is working, massively working. Literally, 701, I said it just needs to get and stay above, just gapped above everything. And it's running, and they're chasing it. But this is what I'm looking for. This little hook that you see over here in the stochastics, we really, for this to be a solid flow higher, where look at the Qs, right? You got this huge advance from the ceasefire, again, April 7th, and then everything gapped above the 200. Can you see the 200 here? You see the 200? So that ceasefire gapped above, and then everything went off because it was April, short covering, mechanical buying was massive. The flows over fundamentals were, I wrote about that 3 times, not once, not 3 times. I wrote about how strong the flows were with vol control funds, with CTAs. Then it has this kind of, ooh, come on down, but it stopped right at that 664, right? Right here. And now it's bouncing violently. But for this to be really convincing, it needs to get back above a crossover. So let's see. We can close 711, still very bullish. I still see these gaps up on top, like I've mentioned every day. These are still in play. I'm going to actually make that the right color. So above 710, we hit 715. Above 715, we hit 725, then 735, yada, yada, yada. But this is the interesting part. Can we go all the way back up and break out higher, this 765? Remember the fib retracement from this entire pull down when Trump came in and the Trump tariff terrors? So this alley-oop, Iran war, ceasefire, and now this pull down, yen intervention, and ceasefire. So we could get a little melt up here, a la 1999 kind of vibe that I've also pointed out is still a fractal that bulls are tightly wound up about. Very, very, very much so. I don't know what client post I put it in there, but I showed you the fractal of the 1999, and this SPX is not closed below the 10-week in months. And then it just got saved. Little T's down below at 7,400. And then what did it do? Totally got saved last week. And then what did it do? It gapped higher. What's it still doing? Melting up. So you don't short all-time highs. You don't buy all-time lows. I mean, you can, but the point is, this is a breakout. In the meantime, SPX, like, why is it freaking out? NVIX is also green. What's underneath the scene? A huge earnings beat, AI-related, SanDisk, Teradyne, tons and tons of AI-related plays, Intel, Caterpillar earnings, tons and tons of AI. Look at the semis, tons of money rotation, just impressive. So I had the 77.26 on the upside as a potential parabolic bump, and we're fast approaching.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.